Hello, guys. I'm just going to address that question that Adiel had about the rents here real quick while they're getting the PowerPoint ready. The rents are real high in Denver because we haven't had a lot of appreciation over the past 6 years like you did here in California. So our market has been kind of steady or flat. We were a real .com market, and it kind of started trending downwards. And now, since our values are so reasonable, we're starting to see a large amount of relocations coming into the Denver market. Well, the relocations are mostly coming from California. You guys tend to, Californians and Colorados tend to swap population quite a bit. So what we're seeing is Californians are used to paying quite a bit more a month for rent or for mortgages than the local economy can. And so they're entering the market, and they're kind of putting compression into the market for the locals. And so the locals are really trapped into this price point of about $1,100 a month to about $1,600 a month. And there's a large majority of renters that need homes there. That combined with the foreclosures that we also suffer through from the subprime mortgage or whatever you want to call it, through that, the same people that are having foreclosures are entering the rental market and creating that demand. So it is real strong demand right now. This is just a little thing. I'm going to skip over some of these slides because we literally have 20 minutes and 4 hours of information to give you. Our employment market is majority energy and energy technology right now. Colorado in the 80s was a huge petroleum market. Again, now that gas prices are high, remember in the 80s we had the whole thing going on with the oil embargo, and so we began drilling in America. Well, they stopped that, and now we're having the energy crisis with petroleum again. And Colorado has a large shale reserve over in the eastern slope. It's owned by the Navy. And there's more oil in this shale than there is oil in Saudi Arabia. And that was a statistic from the History Channel. So if you don't believe me, go after that. But I heard that on the plane last time I flew out here. So employment, ConocoPhillips is moving in. They're bringing in 26,000 new jobs into the Denver market in the next 4 years, over the next 4 years. We also have Lockheed Martin is building a new space shuttle right inside the Denver market, as well as the National Renewable Energy Laboratory, which is in Golden, Colorado. It's actually right next to my office. So those of you guys who've been there, my building my office is in a kind of an employment area, kind of a little technology, little mecca. It's a petroleum energy tech area. And these guys, we're going out to lunch. These guys are high-fiving each other because they're just like, woo, we're making so much money. This is awesome. We're paying $5 a gallon for gas. I paid $5 at Utah over Memorial Day for gas. Crazy. And then you got National Oceanic and Atmospheric Research, which is right outside of Boulder, up in the Superior Boulder area. That, of course, is global warming, right? I mean, those are the guys that track global warming, weather patterns, all that stuff. There's a lot of money going into that right now because of the fear of global warming. So, the National Renewable Energy Laboratory is solar, photovoltaic cells, and wind generation. And a lot of people don't know this, but Colorado is right on the forefront of solar generation and wind generation because we have 360 days a year of sunshine in Colorado. And on the plains, if you can imagine the mountains coming over, the plains are relatively flat, and you get that big wind tunnel push right through. Kind of like when you're, all the windmills down when you're just west of San Francisco. You're going over. There's that lake out there next to Tracy. No, I don't think that's called. I know though. My grandma lives over there. But yeah, all those big windmills. So they're putting those in all over Colorado right now, and they actually test them out there, and that's where the National Renewable Energy Laboratory tests for new wind farms. Current labor and unemployment statistics. This one is as of November of 2007. I actually just updated the slide. It's pretty much the same. I think it actually dropped to 3.2. This is the backwards slide. This is my old PowerPoint. So it's actually 3.2 for Colorado versus 4.2 for the nation right now. It's actually in level. And then Colorado job growth, we had 47,000 new jobs last year. There's supposed to be another 45,000 job growth this year, as well as 65,000 people relocating into the Denver market. This is important to us in Denver because if you track the history of Denver in Colorado, I should say, on the Department of Labor and Agriculture, if you go on the website and you Google DOLA, Colorado Department of Labor, You can pull up this chart. The chart will show you a 26-year history of population growth. And the last time Denver saw a $65,000 increase in population was from 97 and 98. That year, our real estate went up 33%. That same year. So this is a big statistic that a lot of local real estate investors are looking at to buy a lot of property. This is a kind of a transportation map. This is real important because this shows that line that you see on the left-hand side there, that is the new E470 expansion. And those of you who've been out to Denver, you've seen it because we pretty much buy right along that line. This line was built in the past 10 years. The lower half was built about 10 years ago. The upper half was built about 5 years ago. That's really where the city's growing. That's where we're finding real affordable houses and people that are willing to pay a lot of money to be in those houses, a lot of money per month. As opposed to going to real inner city areas where we're buying smaller homes that don't, they may or may not cash flow, but we get nice, good-sized homes along this route. We can get new construction all along that route, so it's really good. Here's a statistic on some median home prices, and I'm going to have to go a little quicker because we're going to run out of time. But I just want you to look at, if you take the median home price and divide it by, or the median income divided by the median home price, you get a percentage, right? A basic affordability index, real basic affordability index. But if you compare that to other cities, you can see why people are moving to Denver for affordability. If you run a business in the Bay Area and you move your company to another area that's less expensive, you effectively have given your employees raises. Right? And so this is what we're seeing in Denver right now. A lot of companies coming in. We have a real similar quality of lifestyle to California. Other than the snow, our weather is really similar, believe it or not. And my whole family lives in the Bay Area, so I'm here a lot. I'm here like 6 to 9 times a year. I'm here a lot more than I do this. So what we have is we have some refurbished HUD and REO properties, and these are properties that have been purchased by an investor. And they try to buy them in bulk, but sometimes they buy them in the multi-list. They're just trying to hit a price point. Typically, these are houses that I told them to buy myself because I want to make sure that we're going to be managing them also, and I want to make sure that it's a good end-user product that we can manage and we like the area, and it's going to be something that we can get occupied quickly. They go out and they purchase the property. They go ahead and put in the upfront repairs in the property. Get it to what we want is FHA standards. So it's a standard at a house that could be sold on the market today to an FHA buyer. Okay, that's a safe, clean, stable home. That's the requirements that we have to put in it. You still have the rights of inspecting the property. So unlike a HUD where we were selling HUDs before, which you were buying them as is, and then you'd get into the house and we would estimate, hey, yeah, it needs $8,000 to $10,000 in repairs. And you get in and you find out, hey, it might need a furnace or it might need a new water heater, which obviously we can't tell by a visual inspection when the house is not turned on. There's no utilities. These houses, you get the opportunity to buy them when they're already owned, they're already de-winterized, they've already been repaired, and you can inspect them and request repairs, just like a typical seller. And also, in many cases, and 9 times out of 10, we will actually have these houses rented before you close. That is, the end use is a guarantee to you that these houses are rented, and that's what we also have. So if you close and it's not rented, you'll actually be paid a proration until the house is rented from the first investor that actually bought the property. These guys aren't making a lot of money. These aren't these fix and flip guys you see on TV. They're literally making $7,000 to $12,000 a house. They're just facilitating it for us. They're just contractors that came to me and said, Sean, I want to invest in real estate. I don't know what to do. Do you need help? And I said, yes. I have this group of people that want fixed houses. And so this isn't for everybody. We also have the HUDs that are disrepaired, but you got to have a little bit of patience and guts to do that.